Okay, what I'm going to do in this video is I'm going to have a look at two stocks in the UK market in the same area, business area, and we're going to compare value being Gately against one what's considered more highly rated being KGH. So first things first, we've got a good opportunity to just look at how these stocks act in a market rug pull, and value against growth, highly rated against one what's just considered good value. So first things first, throw it in the GTRS watch list. This tells me I'm looking for aggressive growth stocks. We can see the figures what I'm interested in down the left hand side on the fundamentals. We can see a PE ratio of 13.2. My way of scoring the fundamentals I trade towards, it scores 19%. In the whole UK market, this one comes in at 1,151 out of 2,000 odd stocks. For growth and technicals, I trade towards. The technicals are zero on this at the moment because the market has had a rug pull. So that's dropped it down the list. So let's just compare that with, these value criteria. Let's compare that with more highly rated KGH. Straight away, the value guys will point at the high PE ratio. I'm all about growth, gas in the tank. I want gas in the tank of what I'm going to trade. I don't want to just have something what's bumbling along. I want something what could aggressively sort of move higher and, give me good multiples of return. So, straight away you'll see that this is number 8 in the GTRS. Its technicals are 100%. It's holding its trend. Now, I'll explain that in the next chart. We'll have a look at the charts as well. But, this is considered highly rated. It's highly rated for a good reason. The growth. Now, I trade towards the best numbers I can find. Moving the right hand edge is unknown. This one's actually just been through results today. Doesn't mean it will go up from here. Do not, chase tips. Try and have some criteria. I'm just sharing something I've always traded towards, something I've learnt over the years of what fundamentals I like my stocks to have to what will exhibit relative strength against the market. And we've got a market what's just had an unbelievable rug pull, a market crash. So we've got a very good environment to compare these two, value against aggressive growth. And let's just straight away go to Gately. Now, KGH has got this much data since it IPO'd. So, I've just started the very crude trend sort of lines from ShareScope from here. But you can see from the IPO, it's up 100%. It's actually, it's had a 47% pullback on the market sort of crash. And it's not really done anything in the last 3 years, 1, 2, 3 years. It's just gone sideways, basically. So if I move this back, this is what it's done in the last 3 years. Nothing. It's just basically, it's not trending action. It's kind of sideways, really, year on year. You're holding this for a long time and you're not getting much beta out of it. So remember that 47% pullback in Gately through the market crash of 2020. And let's just punch in KGH. So back to sort of July 18, that's all the data we have on KGH, but you will see it's exactly the same time frame. We have a nice trend, rising trend, and this highly rated stock, common consensus, everyone will tell you this. They will say, when the market has a rug pull, the highly rated growth stocks will get smashed, but the value stocks will outperform. Don't take my word for it. I totally disagree with that. And, throughout my sort of trading sort of journey, I noticed through every correction, every bear market, that the best growth stocks, what have real growth and are still growing, hold up the best. And you're seeing it in the US market now. The best stocks, aggressive growth stocks, they're all highly rated, and they are propping the whole US market up. So this is just like for like, two UK stocks in the same sector. KGH pulled back 37% against 47, was it, for Gately. Not only that, KGH has respected its own trend. KGH has risen from the IPO to its highs 190%, and it's done that in under 2 years. So, there's a few things to think about there. Is my value stock a sloth? As it's year on year, it might stay value. Am I making money through dividends and I'm just happy that this stock is just trading in this range? Or am I looking for price appreciation? I'm looking for price appreciation through growth. And that is I call it gas in the tank. And that is why KGH has come out of the gates flying and trended higher. It's respected its trend. Now, this trend could come to an end, obviously, going forward from here. A lot of stocks are going to go through a very tough time. The way I sort of look for growth stocks is I have the GTRS watch list, and the best stocks will keep floating to the top of that list. And, I will compare them all in the same way, like for like against each other. Growth first, A few other, metrics come into it, what would be considered value metrics, but I'm always going to weight my sort of stock purchases on growth because I want price appreciation. Aggressive price appreciation is what I'm trying to capture. So, there it is. The value stock fell more. The value stock has basically gone sideways for how many years? The growth stock fell less, more relative strength there, and the growth stock has had double the move in half the time of the value stock. So it's a win-win for me. I will always trade towards those criteria. And one thing I always say is value without growth is an extremely dangerous area to be in. Growth props up the stock. So, value without growth has no reason to go up. You've really got to have a reason to go up, to trend higher, I would say, not just bounce in a range. I mean, to trend. And that's what we're looking for. So there you go. That's, great opportunity to just explain something that I sort of repeatedly go on about year after year. And there it is. Okay.